Hi, everyone, and welcome to The Hash, where we bring you the latest and greatest in crypto and culture. My name is Naomi Brockwell, and we have Zack, Seward, Jen Sanasie, Will Foxley, and filling in for Ben Powers today, we have Danny Nelson. So welcome to the show, everyone. And we're going to kick it off by talking about Paxos. So, Zack, what have we got there?
Yes, indeed. Let's talk about Paxos, the big firm behind crypto plays from PayPal, Venmo, and others, has raised $300 million in a Series D that values the company at over $2 billion. So this to me speaks again to this continued investor interest in some of the key cogs in the crypto machine. This is a big round, one of the bigger ones that we've seen in recent memory, and it suggests that investors are still seeing opportunity in these markets. I'm going to throw this to you, Will. There's someone seems to be crawling behind you, which is a fun look. So I'm going to toss this to you for your take.
I thought we were just going to let that go.
Paxos' latest.
You should have, Zach.
That's all right.
No, I had a pipe burst in my house last night, and now I have people crawling all over trying to fix it, which is kind of fun to do in the middle of the show. But, you know, that's how it is. So, yes, a lot of big news for the day for Paxos, which has raised $300 million in its new valuation and its unicorn status, which we've seen a lot of these big Bitcoin and blockchain firms become unicorns over the last year as the price of Bitcoin has increased. So there needs to be some sort of chart at some point where we're looking at the unicorn status of these companies as the price of Bitcoin rises as well. I think you just see like a perfect one-to-one correlation. But in general, I think Paxos is interesting because of the PayPal news that we broke on CoinDesk first earlier this summer, where PayPal tapped Paxos for the back end of its platform as infrastructure. And like we talk about infrastructure a lot on this show, I feel like, because that's a lot of the news that's coming out right now. A lot of the high numbers are coming from these firms that are doing the back end for crypto. And I think it's important because when you think of a blockchain or you think of any Bitcoin application, like I can use it natively on my phone quite easily. But for a firm that's in the traditional realm, they need to have some sort of infrastructure behind the scenes. Otherwise, it's just like it makes no sense with how finance used to work. So that's why you see firms like Paxos making a ton of money. They're moving into this space where they need infrastructure. They need these smaller firms to come in and kind of show them the ropes for how Bitcoin and other cryptocurrencies work.
Yeah, it's really interesting. I talked to Paxos CEO Chad Cascarilla. He mentioned that a key part of this funding will go toward acquisitions. So we may see some additional consolidation in the space as they look to onboard more big customers like PayPal and certain financial institutions that certainly will be announced down the road. I'm going to throw this to Danny. Danny, we've been noticing a lot of sort of M&A activity in this space and quite a bit of consolidation as these prices and valuations go up. What do you think on the M&A side that this suggests? What's going on?
I think that they're really looking to make use of the new trust charter that they just got out of the OCC. Like that gives them a whole lot of power in this ecosystem, in this space, to really develop on what the federal banking regulator is allowing crypto companies to do with stable coins and with settlement. And I think that this funding is going to let them go out. I don't know who they're going to go after, but just having that backing from the federal regulator is going to allow them to do things in this space and with traditional finance intersecting that we can't even wrap our heads around just yet.
Yeah, pending approval from the Office of the Comptroller of Currency, third such national crypto bank to receive a pending charter. So this is going to be interesting to watch among Paxos, Anchorage are sort of becoming the two federally chartered crypto banks that might be going head to head to provide the back end services for even bigger financial firms. I'm going to throw us to Naomi. Naomi likes a good crypto intermediary take. What does it say that, again, we keep talking about these infrastructure plays, we keep talking about these back-end providers, and they're just accruing a ton of value in this market. What does that suggest to you?
Well, I mean, you can look to the words from the Paxos CEO himself. So CEO, co-founder Charles Cascarilla said in an interview that this will put them in a great position to now scale the business, take advantage of opportunities to make acquisitions. Like they're really setting themselves up for the long term here. And especially as you were just saying, you know, pending what happens with the conditional charter, that could really secure their position there. But he also said, you know, he would call this confidence capital. He says what this is about is our customers knowing that we're going to be around for the next 5 to 10 years, so they can feel comfortable using us as their infrastructure. That sort of security is absolutely pivotal. It's crucial in the crypto space, especially in a world where, there's regulatory uncertainty. There's uncertainty with the code base. There may be changes. There might be forks. There's all kinds of things like that. So the fact that they could bring some semblance of stability to that world and say, whatever happens, we have the resources to really push forward. I think that's great for customers to hear that.
Yeah, for sure. It certainly gives them the ability to say, again, with confidence, hey, mega bank, we can do this for you. We're not going anywhere. I did ask about the Coinbase question. Hey, is there a public listing in the cards for you guys in some way, shape, or form? They sort of coyly said, no, that's definitely not in the cards right now. We're going to see how the cards fall and then get to that bridge when we get there. But it would be interesting to see if at some point down the road, among this crop of publicly listed crypto firms, one could potentially imagine Paxos being in that list. So certainly a lot to monitor there. But we're going to change gears. I'm going to find what we're going to change gears to, and then we're going to change gears to it. We're going to go to Naomi, and we're going to talk about Fed Chief Jerome Powell. Naomi, take it away.
Let's do it. So, talking about Fed Chief Jerome Powell. So the US Federal Reserve Chairman Jerome Powell, he said in a press conference yesterday, he was asked whether he believed that there was a risk to financial stability in trends such as the meme-inspired cryptocurrency Dogecoin. And this is what he said.
Financial stability for us is really, we have a broad framework, so we don't just jump from one thing to another. I know many people just look at asset prices and they look at some of the things that are going on in the equity markets, which I think do reflect froth in the equity markets. But really, we try to stick to a framework for financial stability so we can talk about it the same way each time, and so we can be held accountable for it. So one of the areas is asset prices, and I would say some of the asset prices are high. You are seeing things in the capital markets that are a bit frothy. That's a fact. I won't say it has nothing to do with monetary policy, but it has a tremendous amount to do with vaccination and reopening of the economy. That's really what has been moving markets a lot in the last few months, is this turn away from what was a pretty dark winter to now a much faster vaccination process and a faster reopening.
So a few things to unpack there. First of all, mentioning that, yes, asset prices are high. And he mentioned the F word, froth. It's not a good word for the Federal Reserve Chair to be mentioning, and stocks plummeted immediately after that. People have been suspecting that there's going to be huge inflation coming. You're just seeing, craziness happening with the supply chain. It's going to push prices up even higher as well. I think hold on to your belts, everyone. But I'm going to throw this to you, Will. What are your thoughts on his comments and what's happening in the economy and Dogecoin, all of that?
So I have a question really quick for you, and then I'll jump back into it. But did the initial question that spurred that comment from him come about from Doge itself, or was he just commenting that he's addressing that right off the bat? And maybe it portends to the future. They're worried about how their monetary policy over the last year has impacted and will impact the future of the U.S. securities market.
Yeah, no, I think in the internet age, anything could happen. I love that point about this is kind of the best representation of this economy, because it's kind of people taking things into their own hands, and maybe this semblance of the Federal Reserve doesn't quite have the same control that people have thought they've had all this time. My head just got a whole lot clearer just then. Sorry, anyone watching, I was hearing a bit of an echo and that just disappeared. You're absolutely right. That Dogecoin kind of shows it's the money of the people as people present it, and GameStop was a movement all about the democratization of stock participation, all of that. So it is interesting that these questions are being put to the Fed chair. But Jen, you had your hand up. I'll throw to you.
Yeah. So the story that we covered, I think in February, just popped into my head when we're talking about FOMO and people taking out, loans to get involved in stocks and things like Dogecoin, because we're talking about them on social media and people think that they're going to just get rich really quickly. we've seen some people do this with Doge. They're talking about it on Twitter. They're on Reddit. They're just kind of pumping their money into it to try and get rich quick. What should those people take away from this story?
I'm going to throw that to you, Will.
No, I think it's terrifying. I was listening to a podcast of some top crypto traders earlier today, Suzu from Three Arrows and a few other guys, and they're talking about market frothiness right now. And they just kind of noted that even in hedge fund land, a lot of people have realized they have missed the greatest bull market of cryptocurrencies ever, and they don't know what to do. And so they're just scrolling through CoinMarketCap looking for the next big thing because they have no idea what's going to happen, but they know they need their portfolio to pop 3x to compete with everyone else who did that. And I think you can take the same principles and apply it to the retail market. People see all the money, they've seen their friends make money, and they want to do the same thing. And now it's happening in Doge markets. And I mean, that's the kind of the lesson I think I can pull away from this. If the hedge funds are doing it, then also retail is going to be trying to mimic that. And the lesson, I think, like the thing to walk away from this is like, you don't want to be catching knives on the way down. You don't want to be catching red candles because then your finger's going to get chopped off. So I would say stay away. That's not investment advice, but also it is just not a great market to enter into, in my lowly opinion.
Yeah, it's I mean, I think it's sad that so many people are being forced to become day traders, are being forced to enter these markets as a way of safeguarding their wealth because, you know, the economy's not looking good. And if you just look as a general overview of what's going on right now, it's just so expensive to buy houses, to buy groceries, to live, compared to what it was like a decade ago or in our parents' era or any of that. And these days, young people are struggling. They're looking for ways, like we call it get rich quick, but they're just not getting the same wages that they used to compared to the value that their dollar actually gets them, because the value of the dollar just goes down so drastically. So, it's interesting that they are kind of turning to these other mechanisms for safeguarding money or making money. But I'll throw this to you, Zach. What have we got coming up after the break?
Well, we're going to take a quick break, and then when we come back, we're going to talk about NFTs again, and we're going to talk about NFTs in San Francisco and a particular co-living space there that's auctioning a 75-year lease via NFTs. So we're going to talk about that when we get back. Stick with us. It's the Hash, and we're happy to be here. Thanks.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
And welcome back to The Hash, where we talk about the latest and greatest in crypto news and culture. So before we move over to San Francisco, we're going to talk about Mastercard, which has stated its intentions to explore building applications on top of central bank digital currencies, also known as CBDCs. In their quarterly earnings call yesterday, as CoinDesk reported, they said that they're interested in looking at smart trade contracts, and that's what they are also investing in. There wasn't a lot more information given on the call, but it is notable that Mastercard, which is one of the largest card carriers out there, is looking at CBDCs and taking it seriously. And I think Danny Nelson is probably the best person to talk about this since he's on the show. So that's kind of great. Danny, you got a scoop on Mastercard back in the winter, so maybe you can clue us in on that conversation and what portends for this conversation with CBDCs.
Yeah, so what's really going on here is a lot of different central banks who are looking into CBDCs. They're trying to think, all right, well, if we have digital money, what can we do with it? We don't need to just, use it to conduct transactions. We can actually build on top of it and build programs, and much like you see in crypto. The actual things that central banks will eventually roll out will probably have nothing similar to DeFi and all the crazy stuff that's going on there, but the fact remains that with having digital money, you have this opportunity to do a lot more digital things. And because MasterCard is so important on the retail side of things, it's really important for them, at least they're in their perspective, to be ahead of this and to start to think about, all right, what will these central banks do with their digital currencies, and how can we, as the one of the main retail payment rails, facilitate that? So I'm looking forward to seeing how this develops. Just the fact that they're talking about this so early on, when so few central banks are moving in this direction concretely, is a sign that CBDCs should be taken seriously.
No, definitely. It's some interesting. Oh, go ahead, Naomi. I'll get right to you.
Will.
No worries.
All right.
I have nothing intelligent to say.
I mean, when we talk about innovation in terms of central bank digital currencies, I'm so not excited. You know, if we're talking about innovation in private money, you have all kinds of consumer-facing products. You have things that if a company wants your business, they're going to have to provide value. When you have innovation with government stuff, I can only see like innovation with central bank digital currencies being in the form of like added coercion, you know, added extraction of wealth, added bureaucracy, like all of these things that I am just so not excited about. Like, you know, if you think about government money and the infrastructure right now, like any innovation that came from the existing financial sector came from private companies, and they were really just held back a lot by the regulations around it. So I mean, gosh, like, so Mastercard says that they're preparing for all of this added innovation that comes along with programmable money with central bank digital currencies. Like, oh, I'm so not excited. But Will, what are your thoughts?
Yeah, so Jerome Powell also talked yesterday, I believe, about CBDCs and plans for the United States to create its own CBDC. And he noted that we are not in a race with China, which China itself has been trying to develop a CBDC fairly quickly. And they've launched a digital version of the yuan. I believe it's in circulation in a very small capacity at the moment. But the Federal Reserve has just said, we're not interested in doing that right now. They're still kind of developing it. There's a lot of other Western democracies are still doing, they're kind of in that early stage. I think the Bank of England is moving a little bit quicker. Same with the Bank of Canada is moving a little bit quicker than other countries. And Danny can probably speak to that again a little bit more closely than I can. But I think it's interesting to note that we're already seeing like a bifurcation between Western democracies and some more authoritarian countries like China in the race to build CBDCs. And that kind of shows that there is an inkling or desire for privacy in some cases with CBDCs in Western countries, because we haven't figured out how to do privacy on most cryptos yet. And I think central banks understand that. And so they're kind of putting the foot on the brake just a little bit.
Yeah, with
Danny,
on that topic of on that topic of privacy, I've actually seen some pretty crazy. Well, I mean, Naomi won't think they're crazy. Naomi will think they're boring, but pretty crazy central bank proposals on how to actually achieve that privacy. These are not things that they will roll out, but they're just working through it in academic papers back and forth like that. But in Europe, for example, they're discussing maybe allowing people to have, 3,000 euros or digital euros in anonymous cash that they could use a year, and they have a certain allocation of currency that they can use without being traced at all, which is an absurd idea to have like a set of Disney dollars that you can keep your anonymity with. This goes to show they're really taking they're thinking about everything when it comes to how do they achieve anonymity and privacy when you have inherently traceable digital money.
For me, it seems like the U.S. is really just trying to see what happens. They don't really want to be the first to do any of these things. I listened to a talk by SEC Commissioner Hester Peirce recently, and she was commenting on the ETFs in Canada. And she said, we didn't want to be the first. We wanted to, kind of see what happens in Canada. We've been watching it very closely. And so it just seems like they're taking the look and learn and be slow to innovation aspect in every corner here.
Yeah, very slow moving, just like the government likes, and it's a good thing. The slower the better, in my opinion. But Disney dollars, like 3,000 crumbs that they're giving the people and saying, here you go, here are some crumbs of privacy in your life. We're going to be surveilling all the rest of you, everything you do in your life, your messages, every transaction. But here's $3,000 for you to play with. Go along and have your cute little privacy.
It is kind of pitiful.
Let's change topics before I start riling more and more about the surveillance state.
No.
All right, so now we've got once again another addition. This crazy NFT proposals in San Francisco. There's a longtime Bitcoiner who owns a co-living space called 20 Mission. He's now trying to auction off a 75-year lease in his apartment building as an NFT. The lease will allow you to live there for $1 a month. You won't have to pay utility fees, but you'll have to purchase the NFT for who knows how much. It could go for hundreds of thousands of dollars, millions, or as happened to one guy in California, it could go for nothing because people are getting sick and tired of NFTs. Now, this could be the first. This could be one of the first instances of an NFT actually used for what some might consider to be a more legitimate purpose, because at least according to the guy who's running this, he says there are opportunities to unlock more liquidity by making a lease term an NFT. I don't know about that. A guy just emailed me a couple minutes ago saying he had sold his treehouse for 8 ETH. And so I think that the
his
froth
physical
is
treehouse?
real. His physical treehouse. Apparently the treehouse was featured on a Discovery Channel show, and so that may have jacked up the price. But you could buy, you could get a 75-year lease in San Francisco's Mission District or a treehouse in Arkansas. Jen, did you have something to add on this craziness?
Well, it was just a question for you, and you kind of answered it. But when I hear this story, I just think, like, why does this need to be an NFT?
I'll take a hack of that.
Like
So
Yeah, Zach.
yeah, like it's like this 41 room like hacker house in San Francisco. And I think the idea here is transferability, right? So he's coded into the smart contract some share that goes to him as the landlord, but this becomes a transferable asset. I'm done living in this hacker house. I'm willing to sell my NFT, sell my rights to the next resident of this room. I think that's like the vision for it. So in that context, I guess it kind of makes sense. But yeah, he's able to program sort of the terms of how this like changes hands in a digital token. So I don't know. Maybe that's the utility of it.
I mean, there are potentially benefits to having this kind of thing as an NFT. He pointed out to me that he's able to program in a 1% royalty anytime a transaction happens on the secondary market. Of course, you can't avoid the question of, is this even necessary to do this as an NFT? Hundreds of millions and billions of houses have exchanged hands without an NFT being in the conversation, and it seems to work rather well.
Squatters' rights, like what if I sold the NFT and I didn't want to leave? Like, who's going to force me out? Like, is this legally binding? I know we talked to a lawyer who commented on this and was like, yeah, we're making sure this is all fleshed out. But I think these questions are still unanswered. So I don't know. Yeah.
Yeah, and it depends on the state. Like in California, you can probably stay in that apartment for a very long time as a squatter. But in Arkansas, if he wants you out of that treehouse, you probably got to hit the road.
That's a hot new legal field. I mean, treehouse property rights.
Treehouse property rights.
Like that could be like the new like crypto lawyer Twitter would be like treehouse.
Every day it's something new on
fire
the show.
Insurance for treehouses.
I hope so.
I would hope so.
I hope it's covered, but yeah.
So it's such a smoking hot market. You never know.
I also want to say this is just an interesting character from the CoinDesk archive. So this guy, Jared Kenna, very, very early Bitcoin guy. And we had seen, I remember I was just putting this story together last night and just kind of searching around and going through some of the past coverage. I mean, this is a guy who could have been the next Brian Armstrong. He founded the first US exchange. He had a hard time with it. He went and did his own thing. He's doing fine. But this is a sort of an interesting character from, the early 2010s. That was a cat kamikaze
I'm so
attack.
sorry, guys.
Your cat.
What is happening today?
Oh my god! It's like full moon or like the Friday the 13th or something. But I'm totally distracted. I don't know. I just thought this was an interesting character to add to the NFT narrative. Is that this early sort of crypto adherent is trying to put a little bit more meat on the bones of what NFTs could ultimately accomplish.
I would agree with him on one point.
I think it's really interesting.
Go
Go ahead. I was going to say, so it's a really interesting evolution of smart contracts, because that's essentially all this is just like saying, well, we're going to have this contract on the blockchain and we'll transfer rights. And they're kind of attaching this like, well, it has real world value because it's like the NFT is an asset itself. I think it kind of misses the point. Like it's just kind of like a glamorized smart contract, but I think it's a good use case. I think that rents and things like that, it's interesting to put them on the blockchain. And I think we're going to see more and more of that.
Yeah, and I actually asked him if he thought that combining the frothy NFT market with the what some might say is a bubble housing market in San Francisco is too much to bear. And he said he actually doesn't think that making it an NFT increases its value. He would take $5 million for it, but he doesn't think it's worth that. And so, at least it just goes to show. I really want to see what happens because San Francisco prices are so expensive and NFTs are so expensive. So really, what happens when you combine the two? Do you get a treehouse worth 8 ETH? We'll have to stick around.
Yeah, and who are you going to pass that NFT to, in a few years when San Francisco's dead and everyone's moved to Miami and no one wants to live there and you can't pay people to take your NFT and take this license or rent agreement off your hands?
San Francisco will be weird and wonderful once more when that happens, and I cannot wait. Anyway.
Absolutely.
All right, moving on. ETH hit a new all-time high today, reaching $2,800 this morning. And while it is outperforming Bitcoin, Kevin O'Leary said in a CNBC video yesterday that ETH will always be number 2 to Bitcoin. Now, he compared the two to gold and silver, and even said that ETH is like the drummer that just couldn't quite make the band. And so I want to throw this to Will. Well, what are your thoughts when you hear these comments coming out of the mouth of Kevin O'Leary?
Zach seems excited, so I want to hear his.
I just wanted to say this is A+ level trolling right here. That's all I wanted to say. A+ level trolling. This rules. Will, take it away.
Did you say that he said ETH is the drummer that wants to be in the band but can't? Is that what you said?
So he said that ETH is
Great
like
quote.
the drummer that couldn't just make the band for the Beatles. So that's not a direct quote, but that's basically what he said. Yeah.
Okay, Ringo. Rip. Now, I think that's interesting itself. I mean, that conversation's been around since before Ethereum even launched. Like, can another token or blockchain take over where Bitcoin is? And historically, the answer has been no. There's been times where it's been kind of close. The flippening, as it's most popularly called, where the market cap of Ethereum overtakes that of Bitcoin, became the closest I ever believe it has been in 2017, where it became within a few percentages of flippening Bitcoin. That was during the big scaling debate where Bitcoin and Bitcoin Cash became a thing. And then since then, Bitcoin dominance, which is the market cap of Bitcoin against all other alternative currencies out there, has risen. And I think it reached a peak of almost 80% since then. And now it's dropped again. I think it's close to it's around 40% right now. But it's an interesting conversation. And I think it kind of brings in two different ideas to play. So on one side, you have Bitcoin, which really is just kind of based on this idea of libertarian sound money and decentralization and kind of taking away that power from the state. Ethereum, on the other side, has aspects of decentralization, but it's more focused on the utility of the platform itself, and it has less guarantees of censorship resistance, though very, very strong guarantees nonetheless. So two different systems, and if Ether ever takes over Bitcoin is really just, it's an interesting conversation, but everyone's been speculating on it for so long. So like Zach said, I think this is just excellent troll material, excellent troll material.
Absolutely. And there are a couple of points the essence of what he's saying is that Ethereum will always be second to Bitcoin, but he's also saying it will always be number 2. So you can take that statement alone and say will something not pass Ethereum? There's a lot to unpack there. Litecoin used to be the silver to Bitcoin's gold. That's what everyone called it. When Ethereum, before it was launched, people were saying that this would become the platinum to Bitcoin's gold. And now people say, well, it's the silver and it's the number 2. Things change drastically and this space moves fast. So we're going to have to see what happens. I think he's is very confident for someone who's not really ingrained in the space to be making calls about what's always going to be. I definitely wouldn't have the confidence to make predictions about what's always going to be. But I think, you know, I love what Ethereum is doing. I love the DeFi movement. I love that we're decentralizing all areas of trust, and Ethereum is kind of enabling that. So I'm excited to see what happens. I love them both. May the best coin win. And Zach, what do you got there?
I'm just saying, why not both? I mean, there's this idea that it can be one or the other, and I think the metals comparison is actually interesting, right? You know, gold, silver, whatever, titanium. There's rankings, but then, you know, there are other elements on the periodic table, right? So, you know, Bitcoin can be the gold. Ethereum can be the oil and facilitate a bunch of other different things across the internet that are actually pretty cool. It doesn't need to be one or the other, and sort of this maximalist strain of thinking, I think, is a little bit limiting in terms of how one can view what the industry can offer. So, you know, strong trolling effort by the Shark Tank guy. He's in the business of having strong opinions and facilitating conversations like this. And I only hope that they are as erudite and insightful as this conversation has been so far. And I'm going to throw those fancy words up to Danny because I want to hear his take. What do you got, Danny?
You know, I have a very strong association of Kevin O'Leary and Mr. Wonderful, his personality on Shark Tank. And it is just to go back to this idea of trolling. Everything he says is so laden with a little. His tongue is so thoroughly in his cheek that you can see it poking out the other side. So I think he's just trying to rile people up here. I don't think that he's really examined the Ethereum network and what its potential is, or what some people say its potential is. And so that is going to be limiting his thinking there. And why bring nuance to a conversation when you have a catchy headline? Like, it's always going to be number two. So I think that's what Mr. Wonderful is. He's sprinkling his magic in this debate.
I love that imagery of his tongue so far into his cheek. That was great, Danny. And I think a great last moment. And yeah, Zach, take us home.
All right, I'm going to say goodbye. I'm going to try to keep my tongue properly placed, and we'll see what we can do. It's been The Hash. It's been Thursday. We'll be back tomorrow on Friday. Danny Nelson, thanks so much for showing up. We'll get you some more cats tomorrow, I promise, and it's going to be fun.
Sorry, guys.
I liked it.
And people crawling on the floor.
That
was pretty
great.
cool. I think we could all bring pets and other four-legged creatures can all
bring your distractions to work day.
Someone from the basement in San Francisco.
Yes, basement dwellers. We got the whole nine here. All right, well, thanks for sticking with us on The Hash. We'll be back tomorrow. If you like CoinDesk TV, 3 p.m. is your next chance to engage. It's all about Bitcoin at 3 p.m. ET, so stick with us, and we will talk to you soon. Thanks so much, everybody. We'll see you tomorrow. All right.
Bye.
Bye.